Welcome back. It's time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. Kash Pashootan is with us, of course, today. He's at First Avenue Investment Counsel. He's the CEO there and a longtime portfolio manager. We're going to talk in this segment about a stock that Kash likes, and we saw it as we went to break, and it has had a fabulous 2025 so far. It is Franco-Nevada, the flagship, many would say, in the gold and precious metals streaming and royalty business.
Exactly, Paul. You know, I thought I'd talk about Franco because investors seem to be very intrigued with investing in gold. They've seen it appreciate. They see that there's global geopolitical tensions, and historically gold has been a safe place to be. It's been a great hedge against inflation historically as well. So many are sort of scratching their head and saying, how do I add some exposure to gold to my portfolio to buy gold bullion, gold stocks? And Franco-Nevada is one of the ways that investors can get exposure to the gold space. We like the royalty model. We're getting an income stream from assets. So overall, we like getting exposure to gold through that business model. Now, I would also say that we believe gold prices are going higher. And so if that is one's investment thesis, the idea of higher commodity prices certainly bodes well for a royalty-like business in that commodity. The other thing is, when you look at the chart or you look at, let's say, the price to earnings ratio, it doesn't seem cheap, and it's well above what we just talked about the TSX is trading at. Today, Franco-Nevada is somewhere around 33, 34 times price to earnings. But what I would say is that when you look at its historical price to earnings, it's well below it. So historically, it's been closer to 40 times. Today, you're able to buy it at 33, 34 times. So again, price to earnings ratios, it's not one size fits all, and you just look at it and compare it to what Bell Canada or Enbridge is trading at. But in terms of getting exposure to the gold space, getting it through a royalty model, which is what we like, and buying it on a relative valuation being lower to where it is, all at a time where our investment thesis is gold is going higher, makes a lot of sense.
Your colleague Brian Madden told us a short time ago that when a company that you guys own releases results, you spend a period of hours looking at its most recent financial results. What are some of the things you look at in Franco-Nevada's results when it reports?
Well, these businesses, because they have multiple royalty streams, one of the risks are that how healthy or probable is that royalty stream continues in the future. And sometimes it's not even about operational risk, it's about political risk. So, for example, Franco-Nevada had to shut down their Cobre Panama royalty. And so when you're looking at a business of this type of structure where there's royalty streams, that's one of the main focuses. It depends on the business, but in terms of a business like this, that's assessing continued and future health of the royalty, and not just from an operational perspective, but from a political perspective.
Right, that's the First Quantum Minerals situation. It's the operator of that Cobre Panama mine in Panama. The country shut it down, still is not producing. Franco was criticized for having a large exposure to that particular mine. Did you share that criticism?
I wouldn't. I mean, look, we know no one likes to lose. You know, and I think when you lose, there's always everyone's looking to blame someone. If you look at Franco's business overall and the assets that they have, we're happy with the portfolio, and we understand that not everything is going to be a winner.
And let's finish with your outlook on gold. Just elaborate a bit more on why you think the outlook for gold is positive.
I think a few things. One is that we expect continued geopolitical tensions, and historically gold has done well when you're in that kind of environment. We'll see where inflation goes, but the other side of all of this is, look, the mainstream narrative view is that rates are going lower. And when you look at historical gold prices, declining interest rates are a positive for gold, because what happens is investors look at gold as, okay, somewhere I park my money. And the biggest competitor to gold in terms of parking my money is things like savings accounts, short-term fixed income instruments. And so when those savings accounts and short-term fixed income instruments are paying an attractive yield, more compelled to be there instead of gold. So as you start to see interest rates come down and investors look at it and say, well, I'm going to earn 2% to be in that savings account, gold makes more sense. It's a different consideration when an investor looks at it and say, I'm getting 5%. And so the savings accounts and short-term instruments win that tug of war, I'll say, more often when rates are higher. And that equation is going in gold's favor as we think about the next few quarters.
That's